Hello guys, and welcome back. For today's analysis, I'm going to analyze at least 4 PS. Last week I was kind of very busy, and that is why I wasn't able to drop an analysis. And maybe on my Telegram group, I couldn't drop an update. I think I only shared one setup, uh, two setup, one which was missing trade, and the second one was losing trade. But nonetheless, we are still profitable. Uh, we are still swimming in profits for the month of February as well. We closed month of January with the public signal, I think with 4 winners and 2 losers and 1 break-even. So this is dollar index, and I am going to start from weekly outlook. And I hope you guys can still remember the analysis I dropped. I call this low. I call this very low on dollar index. If you can go back to September where I dropped this analysis, and I was expecting a delivery towards these relative equal highs, and that happened on November. And ever since then, I do not drop any update on dollar index until today. And this is my long-term draw on liquidity. So we have this draw on liquidity where I'm expecting sooner or later dollar index to reach for that is 114, where I explained that I'm expecting Euro USD to go for parity, that is to trade below $1. So on dollar index, when we look at the order flow, we can see what happened. We have a consolidation, and then we have this manipulation, and then we have some form of structure over here. And then as we have this displacement, the order flow shifted after the market range for a very long period of time. And this is where market repriced back to an internal range liquidity. And we already have that external range that we are expecting the long-term delivery, this draw on liquidity. So you can see currently we have this fair value gap, and this is not just an ordinary fair value gap. What we have here is an order block. So an order block coming in line with a fair value gap, it signified an important key level that we can expect a continuation by. So I do not expect the market to trade below this fair value gap, that is to trade below 106.740. I'm expecting this fair value gap to hold. And for this coming week, this is my weekly expansion. I'm expecting the market to reach for this buy side liquidity. So this external range liquidity is my draw on liquidity for the week. I'm expecting a bullish candle to close above the previous week high, and then to target previous month high. This is your previous month high. So when we go down to daily time frame, you can see price is not as smooth as it used to, because we just finished trading the month of January, which we already know what the data is saying about January. January is not that much of a volatile month, even though due to the Trump inauguration and a lot more fundamentals, we can see some crazy movement on January. But mostly, January is not that volatile. So this is expected. And now what we have is this refined weekly fair value gap, which we have a bit larger fair value gap on daily, an imbalance, and the presence of this relative equal loss, or I say trend line phantom. So market taking out this, which is now obvious on daily, which was not obvious on weekly. So now market taking out this low, and as I mentioned, this high is our draw on liquidity for the week. We will expect a movement down to this high as our draw on liquidity. So we have this as our draw on liquidity as our target. We have this as our target for the week. So in a nutshell, I'm very bullish on dollar index. What is left now is for us to consider the fundamental, and taking a look at the weekly, or I say the daily, the hourly chart. We can see on the hourly chart how market fell to actually break below this low. And then looking at the present market right now, you can see we have this breakout market structure, which is very beautiful to see. So we can expect some retracement, especially we keep an eye to this fair value gap or this mitigation block, and we continue buying dollar index, unless if the market flow was wrong. But dollar index is looking very, very bullish for now. So now the next is I'm going to whatever we have on dollar, and then we automatically have opposite of what we saw on dollar. So I'm expecting sell to happen on Euro USD. And this is Gbpjpy. If you could recall last 2 weeks, I dropped, was it last 2 weeks or 3 weeks? I dropped analysis on Gbpjpy, and I was bullish, and market proved me wrong. Market come back and kick me out, even though I do not participate much on Gbpjpy. I think I just execute one trade since the beginning of this year. I don't think market even kicked me out, but I do not engage on Gbpjpy because the price was very difficult to read at the moment after the moment I dropped that analysis. So currently I can now see a much clearer bias. Looking at the price right now, the market is even more clear to me. My analysis is that very simple. I just consider where the market is coming from, coupled with some fundamentals, which will help me to determine where the market will likely be going to. So we have this fair value gap, and it is interesting to see that market still make no attempt in returning to this fair value gap. Why? Let me show you something in a bit. You see, as market mitigated the fair value gap for the first time, for the second time, market reacts on this fair value gap, which is now expected to be inversion fair value gap. So then we have another push for the second time, but we have what? Failure swing. So market failed to actually tap into the other block. Then this make me lose hope with my bullish bias, honestly speaking. You can see multiple times where the market pushed up, but it even failed to actually reprice back into this initial fair value gap. And then it reacted on this rejection block, and then we have continuation sell. And now looking at the current price on Gbpjpy, you can see we have this fair value gap, which now failed, which will now serve as inversion fair value gap, right? And because this is not big breaker, so it will serve as inversion. So now we have candle body closing completely inside the fair value gap. This is a breakup structure. When a PDR, especially fair value gap, market traded multiple times into that fair value gap, as you can see here, and the market come and trade below that fair value gap, we consider that as breakup structure. Beside this low that market broke, so this is also second confluence of breakup structure, this inversion fair value gap. So now what we will expect is some kind of retracement and continuation down. So this inversion fair value gap is here. We can keep it or we can take it away. And you can see this week we have a very interesting gap, this volume imbalance. So we have many reasons to expect a push, a small push to this volume imbalance and continuation sell. And our target is going to be this sell side liquidity, this relative equal highs. This is going to be our target. So we have this draw on liquidity on Gbpjpy, and we also have another draw on liquidity. Let me delete this. We also have another draw on liquidity here. But for this week, this is our expansion. Expansion is to see market coming here. So when we go down to daily time frame, you can see on daily time frame, this is that our inversion fair value gap level. Let me delete it because you don't need all the drawings. And this is that weekly volume imbalance, which you can clearly see two PDRs on the daily. And then now for this coming week, we are going to keep eye on these two PDRs. Why these two PDRs? Because the volume imbalance was very wide. So we are going to see if we can have market reaction on this daily fair value gap. If we can have market reaction on this daily fair value gap for us to continue selling Gbpjpy. So we have a kind of two scenarios whereby anything can happen. Market can decide to tap into the first one, and upon seeing confluence of a lower time frame, we can start selling off of that first fair value gap or the second one. But our target is 108.3 for this coming week. And for Nasdaq, the bias on Nasdaq is very difficult for me this week. The price is difficult to read, so I'm not interested in anything that has to do with discretionary trading Nasdaq this week. So I'm going to skip that, but I can trade it mechanically, especially with my favorite New York Judas model. So this is an all-time high on gold. Let me delete everything because I am not a fan of keeping a lot of drawings. So this is my, if you can see, this is an all-time high on dollar index, right? We have this all-time high on dollar index. And honestly, for now, if we expect retracement, I will be expecting retracement on weekly towards this fair value gap. That is the only thing I can expect on gold. But something interesting here is when market form an all-time high or an all-time low, predicting reversal at that time is very, very difficult. It's much better for you to wait for the reversal to happen before you continue going instead of trading against the trend. So in this week, you either use fundamentals or the macro perspective, maybe commitment of traders report, whatever, to actually navigate gold, or you focus on more buy opportunities. But for me, all I'm seeing is the buy opportunities are exuded, and for the sell opportunity, I don't see anything solid to trust that the market is going to continue selling. Even though we can see this previous week high, and I mean, this is our previous week high, market taking out this previous day's high, and we have previous day's low, and market closing below the opening price of the previous day. I am not expecting bullish or bearish, but if I'm to expect something, then at gunpoint, if you put gun on my head, I would say I'll be expecting drop towards this fair value gap. But I am not going to engage gold unless I see what Monday do, what Tuesday do. Upon seeing something more clear, then in that regard, I can be able maybe to come up with something to engage gold. But honestly speaking now, it's better for me to stay sidelines and watch what it do, because we have been catching gold buy. If you could recall, I've been calling consistently the price of gold. And this year alone, let me talk about this year alone. This year alone, I have shared a lot of pre-setups on Nasara Forex Academy Telegram channel, all for free. And the analysis is here on YouTube. You watch, you educate yourself with the analysis, and you cut the trade with me. We have been calling gold, but right now, I don't have idea what gold is going to do. And that is me saying that is that for this analysis. Make sure you subscribe if this is your first time. Make sure you subscribe. Don't forget, this is one of the favorite educational channel on YouTube that teaches forex for free and a lot more stuffs, podcasts and all. So make sure you subscribe, like and commenting is what will make YouTube algorithm to push this content to other traders for them to also watch and learn from the information that is shared in the video. So guys, see you next time. Thank you.